It is October 18th, and tonight's analysis is pretty simple. We're right up here at resistance. You can see last time when we tried to break through 1220 on this S&P 500, the past two times prices have been rejected above 1220. So we're right here again, and we got a big down day today, which wasn't unexpected, seeing as how it's obvious resistance. But what we do have this time that we didn't have last time is this 50-day moving average, where it was acting as resistance, is now some sort of support. So what we can expect to happen, we can build our thesis around this, is if we get some kind of stabilization tomorrow, which I am looking for, in the next few days, maybe some chop around like this and a little channel will give us some indication that we can look for a breakout towards the end of the year. Now, if we break down below this 50-day moving average, obviously that's not going to be the case, so we'll look for that tomorrow. But for right now, taking everything into consideration, all the market leaders and where they're at, and finally some strength in technology and even the financials, did do fairly well today. Goldman Sachs closed up on the day. Okay, so we've got something at least good is happening with the financials. But one trade that I'm looking at right now is Cummins, and this is why. It's got, kind of a downtrend. It's been pretty choppy, but this is what I like right here at 80 bucks. We've got some real firm, solid support here at 80 bucks. We're kind of at the top of this channel here, so I wouldn't be a buyer of it right now unless we get some kind of stabilization above this 50-day moving average here. But what I like about Cummins is if we zoom out real long term here on a weekly chart, then we can see we had this old double top way back here in 2008, but if we extend our lines out here, okay, you can kind of see what's going on, is that this is forming a base right above its last cyclical high. So the cyclical highs have been surpassed, and we're testing those right now. So if you've been following along, you can see that, go back and look through, that I have made this analysis with Cummins before, that we've got this shoulder, this head, this shoulder, and then here's our neckline, here's our breakdown, and here's our throwback, and we're getting rejected at this breakout. But if I go back to some other ones, like Intuit, I think I've done this one before too. This one, I did the same analysis. We got a shoulder, we got a head, we got another shoulder, and then we have our neckline, we had our breakdown, then we had our throwback, which was failing, and so far this looks exactly like Cummins. But then the past week, we got this. Okay, this is a breakout above the neckline, which really shouldn't happen if it is a true head and shoulders top. This completely invalidates our head and shoulders thesis. We did a measured move from 56 to about 48 is about 8 points. So you take that 8 points and subtract that from the neckline, and that's your minimum target for a head and shoulders, where the very least that it should go down to is 40. So that's what we got. Usually it's just a minimum, meaning it could go lower, but in this case it got to 40 and completely went right back up, and now it's broken through this neckline. So maybe, I'm thinking, because it happened here, and it's only a chart, they're not even in the same business, same industry, whatever, that the same thing could happen with Cummins. I do like Cummins because of the weekly as well. So that's what I'm looking at. Anything closer to 80 bucks is going to be a buy on Cummins. Alright, and that's it.